You probably didn't notice when it happened. Most people didn't. But a few weeks ago, the Fed quietly flipped the switch on something massive. No headlines, no breaking news, just a single line in their official statements, one that changes everything. Because while everyone was watching interest rates, the Fed was laying the groundwork to start printing again. And that subtle shift, it might have just kicked off the next crypto bull run.
This is above trend. This is a great economy. Yet Powell felt the need to say that quantitative tightening, which is reducing the accommodation that he provided during the COVID years, would slow down and basically stop. By mid-year, he would tease the start of quantitative easing, money printing.
If you know what to look for, that was a signal. The same one that's predicted every major altcoin season over the past 8 years. And right now, it's flashing again. That means this isn't just another boring Fed update. This is about Bitcoin dominance, liquidity cycles, and a setup that could flip the entire altcoin market on its head. In today's episode, ladies and gentlemen, we're diving into why this wasn't just another Fed meeting, how the Fed quietly gave up control of the economy, and why Bitcoin and altcoins could front run the entire recovery. By the end of this video, you'll see what 99% of investors are missing and why the smartest money is only now starting to move. Hit like if you're tired of missing the real moves. And without further ado, ladies and gentlemen, let's get into it. Okay, guys, now quickly, before we move forward, I just want to show you how insanely impressed I am by these trading algorithms that we're running. If you're not familiar with what I'm talking about, I will put a link in the description below so you can go watch the video of my interview with Ash from Sequence. But let me just show you how my trading is going right now over here on Bybit. So guys, as you can see on the screen right now, I've got my account for the Bitcoin accumulation strategy. And as you guys can see, since we started, which was on March 10th, we've had 40 trades open, 100% win rate. And I started with 1 Bitcoin. I currently now have 1.0307 Bitcoin. So in 5 weeks, I've accumulated 0.03 Bitcoin, or about 3%. And you multiply that up by about a year, I'm about 35% right now on my Bitcoin. This is absolutely insane. Let me show you how the trades are going. So as I open up the chart, guys, this is a 4-hour chart. You can just see this is so amazing for me to watch how this algorithm is just doing all these greens are buys and all of these reds are sells. And it's just accumulating. And every time it does this, it accumulates me more and more and more and more Bitcoin. So this thing just uses tiny amounts of leverage, high frequency trading, and just stacks Bitcoin for me, guys. This is like incredible. And if you're more risk off and you have a bunch of money in stable coins, let me show you my stablecoin strategy. I go over here to my USDT, my stablecoin accumulation one. So I started in this account, guys, with $25,000. Again, 5 weeks ago or something like that. Now I've gotten over $1,500 added to my account in literally just over a month. Now, if we go over here and we look at our trades, you can see this is my stablecoin accumulation one, and it's just been crushing. It's accumulated in this amount of time, in just 5 weeks, about 5.76%. And if it's been 5 weeks and there's 52 weeks in a year, okay, multiply that by 10, we're talking about profits of over 57% on the stablecoin accumulation strategy. So whether you're in stablecoins, guys, or in Bitcoin, make sure that you use the links in the description below, sign up to Bybit, sign up through Sequence, use my links. You get to waive the fee. You get reduction to the commission that they charge. And again, there's no real risk to it. It's fantastic. All right, now back into the video. All right, let's rewind the tape. Here's what most people think happened at the last Fed meeting. Most people think it was really hawkish or terrible. But Powell slowed down the pace of the balance sheet runoff. He said quantitative tightening might end sometime this summer. He dropped a few classic buzzwords like data dependence, yawn, boring, next, not so fast. Because if you actually read between the lines, Powell didn't just pause the fight against inflation. He walked off the battlefield entirely.
Powell felt the need to say that quantitative tightening, which is reducing the accommodation that he provided during the COVID years, would slow down and basically stop. By mid-year, He would tease the start of quantitative easing, money printing, essentially to buy treasuries.
Let me decode that for you. The Fed is no longer trying to control inflation. They're now just trying to keep the government funded. Why? Well, because there's $36 trillion of debt ticking like a time bomb in the background. And interest payments alone are spiraling out of control.
The US government needs to fund $36 trillion of debt that grows exponentially at an exponential rate of interest payments. And therefore, he needs to step up to the plate and print the money. And he's going to do it.
And that's the part no one's talking about. This wasn't a pivot. This wasn't softening the stance. This was a full-on white flag, I surrender, all right, let's go. A silent admission that the fight is over. With the money printer revving up just off screen. To really understand what's happening right now, you have to wrap your head around one concept. Fiscal dominance. It sounds technical, but here's what it means in plain English. The Fed is no longer in control. Monetary policy, that's just a side quest for now. The real game is fiscal. And Powell, he's not playing the hero, he's playing the bag holder.
The Fed is another arm of the government, and when called upon to do their duty and help the government fund itself at affordable levels, they do that.
Ladies and gentlemen, this isn't the first time we've seen this. It happened during World War II. It happened in the 1970s. It happened in 2008. And now, you got it, it's happening again. This time, the mission is bigger. They're trying to rebuild the entire system, piece by piece. We're talking about trillions to rebuild domestic manufacturing, reshore supply chains, fund defense budgets, and subsidize entire industries to compete with China. That kind of transformation doesn't run on tax revenue. It runs on, you got it, printed money. And he's doing it right now, just not all at once. Instead of announcing quantitative easing in bright lights, the Fed is tiptoeing into it. They're not calling it a pivot, but it is. They've already slowed quantitative tightening to $5 billion a month, the lowest level it's been since it began. Quantitative tightening is crawling to a halt, and the printer, it's warming up. Why? Because Powell doesn't have a choice. The government's debt is like a credit card with rising interest rates, and now the minimum payment is getting so high, it's eating up the rest of the budget. Social programs, defense, day-to-day operations, all at risk of getting crowded out by interest alone. At a certain point, the math just stops working. And behind the scenes, they're panicking. Unemployment is rising. Consumer credit maxed out. Layoffs are quietly accelerating. And the housing market, once again, artificially propped up. But now it's buckling under its own weight. But the Fed won't say recession. They'll just act like it's already here.
Powell's going to get off quite easy historically because he's going to exit right before things go bananas.
So you do think whoever else is going to be on that rotation chair is going to be credited? Well, he's going to have to face this massive inflation. So you think we could see?
But I also think that person, I think the whispers are that it's probably going to be Kevin Warsh, as that's the dark horse for the next Fed chairperson. But he's firmly in the camp of, hey, the Fed is a political entity. We are here to print the money. We are here to make sure that the U.S. government reigns supreme as the empire. We are here to make sure that the dollar reigns supreme, and we're going to do whatever is necessary to assist the Treasury and the federal politicians to enact these policies.
Translation: this is the handoff. Powell slows quantitative tightening. The next Fed chair cranks the printer, and the narrative flips from fighting inflation to funding the future. But here's the catch. They've already said quantitative easing won't come back unless rates hit zero. So how do they do it? They wait for a break, a treasury market freeze, a liquidity panic, a bank crisis, something that gives them cover to intervene. Until then, they'll leave a trail of breadcrumbs, carefully crafted language buried deep inside each FOMC statement. In 2019, it was resume treasury purchases. In 2020, maintain ample reserves. And now, slow the pace of the balance sheet runoff. That single phrase was the Fed's way of sounding the alarm without saying a word. Because when they finally swap out continue reducing for conclude reduction, that's the moment when the floodgates open. Now let's talk about the part you really care about, crypto. Crypto doesn't care about jobs. It doesn't care about GDP. It doesn't care what Powell eats for breakfast. It trades on one thing, liquidity. When central banks print, crypto flies. When liquidity dries up, crypto bleeds. That's the game. And the reason this moment matters, because the biggest liquidity engine in the world, the US Federal Reserve, just hinted that the tightening is over and easing could be next.
Crypto really just trades off of how many units of fiat are there in the world. If we have the largest fiat emitter of the United States saying they're going to start trading on QE, you can bet that the rest will follow.
Let that sink in. Once the Fed shifts course, it's like a signal flare in the dark. One by one, other banks follow, like a chain reaction of money printers revving to life. But, and this is key, it doesn't happen overnight. Quantitative tightening doesn't just stop. Quantitative easing doesn't just start. It builds. Quantitative tightening slows. Then the bond market seizes. Then banks feel stress. And finally, the Fed hits the panic button. That's when balance sheets turn. And when that happens, that's when Bitcoin wakes up. That's when the ETH Bitcoin pair finds its floor. And that's when the altcoin rotation begins. But until then, we wait. Because here's a mistake most investors make. They see Powell slow quantitative tightening and they ape into low cap garbage, thinking alt season is back. And you've seen it over crypto Twitter. It's not yet. We're still in the set the stage phase. The part where smart money rotates quietly while retail gets chopped up in volatility. So if you're chasing every new narrative right now, you're front running the fire before the match has even been lit. The signal isn't a meme. It's not a vibe. It's definitely not coming from your favorite influencer on X. It's a macro liquidity shift. When the Fed balance sheet bottoms, when global liquidity moves from downtrend to an uptrend, that is your cue. Until then, we track the signals, we watch the flow, and position for the moment that actually matters. And that is why you want to be subscribed to the channel, ladies and gentlemen, because we're going to cover all of this. And our goal together is to stay ahead of the curve and to see the markets before they evolve so we can place our bets accordingly. So the question is, when does the real fun begin? Bitcoin's been doing its thing. It's held up surprisingly well. Some altcoins have even outperformed. But when you zoom out and look at the total altcoin market cap, the real rotation hasn't started yet. Bitcoin dominance is at all-time highs. It's pushing like 66% or something. Bitcoin is bleeding. And when you exclude Bitcoin, ETH, and stables, the rest of the altcoin market is still lagging way behind. So the question is, when does altcoin season actually begin? Not that everything pumps for a week kind of alt season. We're talking about sustained, broad-based outperformance across AI, gaming, RWA, and yes, even meme coins. And the answer? It comes down to one thing, and you probably know by now. What is it? Liquidity. Not just rate cuts, not just bullish vibes, but a specific pivot. The moment the Fed stops tightening and starts expanding the balance sheet once again. And here's the part nobody tells you. Altcoin season doesn't begin the day quantitative tightening ends. It begins the moment the Fed announces that quantitative easing is starting, and that's an important distinction. Right now, quantitative tightening is slowing down. Until it ends, by definition, easing cannot start. And what we're seeing now has happened before. In fact, it's predicted every major cycle. October 2017, the Fed began reducing its balance sheet. 3 months later, altcoins topped. September 2019, the Fed resumed treasury purchases, Bitcoin dominance peaked, and altcoins surged for 2 years. May 2022, the Fed signaled renewed quantitative tightening. ETH and Bitcoin topped, the altcoin bear market began, and now the same setup is forming again. Back in May, the Fed signaled they'd begin slowing the pace of quantitative tightening, cutting monthly runoff from 60 billion to 25 billion. And just recently, they slowed again, now down to just 5 billion per month. That's not a pivot yet, though, but it's the exact kind of language shift that always comes first. And if history repeats, a full reversal when the balance sheet stops falling and starts rising usually happens 4 to 8 months after that first signal, which brings us to right now. The Fed already slowed quantitative tightening twice, from 60 billion to 25 to just 5 billion. And if history repeats, that puts us in a critical window. November to January. If the Fed makes that pivot at the next FOMC and signals an end to the balance sheet reductions, that could mark the top for Bitcoin dominance and the start of the next true altcoin cycle. Not just for ETH and Solana, but for the strongest names in every narrative, the survivors of last cycle and the stars of the next. So what does that mean for you right now? It means positioning matters. This isn't the time to chase every low cap narrative on the timeline. It's a time to consolidate into quality, because when liquidity returns, capital flows to the strongest names first: ETH, Solana, and a few of the altcoins that actually made it through the storm. Once the balance sheet truly turns, the next wave begins, and fast. But until then, we'll keep watching the Fed, because the signal won't come from Twitter, and it won't come from your favorite influencer, and it definitely won't come from a Telegram alpha group. It'll come from a single sentence, buried inside a statement from the FOMC. And when that sentence changes, when they swap out continue reducing for conclude reduction, that's your green light. The final confirmation that altcoin season has officially begun. But you, my friends, you don't have to watch for that so carefully. All you have to do is subscribe to the channel, and we'll be watching like a hawk for you and make sure that you get the news when you need it the most. Right now, we're in the calm before the storm. The Fed hasn't officially flipped the switch, but the wires are live. The fuse, it's burning. And the markets, they're pretending nothing is happening. That is how it always starts. The narrative is calm, the charts are sideways, and the best trades are already in motion, quietly, without headlines. But soon, liquidity will return. Momentum will explode, and the window to position early will slam shut. So my friends, don't wait for CNBC to explain it to you, because by the time it's obvious, it's already over. Watch the Fed, track liquidity, and stay one step ahead of the herd. And we're gonna do that for you all here on this channel. The clock is ticking, and the next chapter of the cycle, well, it's about to be written. Do me a favor and smash the like button if this helped you see the bigger picture. Drop a comment if you're watching the Fed with us. Let me know what else you guys want to see. And if you aren't subscribed yet, do us a favor, subscribe, because we'll be the first to break when the signal actually hits. And remember, ladies and gentlemen, stay sharp, stack sats, and we'll catch you on the next one. See ya.